Welcome back to the Patrick Lane Show, where we talk about personal finance, investing, and real estate. And today, do me a favor, right out of the gate, smash that like button, hit the subscribe button, and ring that little notification bell so that when we post a video, you get to see it first. It really helps us grow the channel, and hopefully you get some education or entertainment out of it. So it's sort of a, mutual benefit, sort of an arrangement. We really appreciate it. Now, today we're going to talk about El Presidente, Dave Portnoy, and his ETF that he started called Buzz ETF. Now, there's some things out there that might be confused with this ETF just based on the name. But what he's going after with the Buzz ETF is actually the buzz that's generated on social media for certain companies and their stocks, and whether or not those companies and stocks are going to be good investments for you and me. Are we going to make money? Are we not going to make money? And so there's been a few of these over the years, but this one is really focused on it. Well, first of all, who is Dave Portnoy? Dave Portnoy is famous for having started Barstool Sports, which turned into this sort of media company, originally talking about sports, but then talking about other cultural and social aspects. And then eventually he sold out and sort of was bought out, partnered with a national gaming company. And so now he's a part owner of that, but he also retains his online social media presence, and obviously over the last few weeks and months has been very vocal with regard to the GME, GameStop, and the Robinhood debacle, where Robinhood and other retail trading platforms were shutting down the trading of GameStop and other meme stocks that are popular with Wall Street Bets and the Reddit crowd. And Dave had a lot to say about that. Now, right or wrong, what Dave has done has brought attention to the fact that Wall Street Bets and other social media will be important in influencing the way the stock market goes, whether individual stocks and their prices will go up or down, and can we capitalize as investors on that social media buzz based on whether they're going to be spoken positively or negatively in social media. So the ETF itself has actually been around for a few years. And believe it or not, it's kind of interesting if you dig in to the fundamentals of the ETF. First of all, if it had been around, would it have predicted or been involved in the GameStop short squeeze that is going on, that went on in January and that some are saying is still going on, or the gamma squeeze that we talked about here in a past video? And the answer to that, frankly, is no. And the reason is that the ETF, the Buzz ETF, is focused on companies that have a $5 billion market cap or greater. Well, as we know, GameStop's market cap is below that $5 billion threshold, so it would not have been included in this ETF. But some of the stocks that are included in the ETF are things like Facebook, Twitter, Tesla, and others that are talked about quite a bit on social media and have a market cap over that $5 billion threshold. So if we look at what has happened with this ETF, it's named Buzz and has changed recently to be traded as Buzz because Dave Portnoy bought into it. But actually the underlying ETF and its fundamental analysis is based on an artificial intelligence algorithm that has been combing through social media, and it finds the positive mentions of a business, and it also finds the negative mentions of a business, and it runs those positives and those negatives through a formula and pops out the other end. Now, it monitors 250 to 350 companies, and it's going to include about 75 in the index itself. So again, it's been doing this for a few years, so we can look back and see what type of return it's had. And actually, it's pretty surprising because if you look back at the performance of the S&P over the last 5 years, since the inception of this ETF trading algorithm, the S&P is up at about 113%. Compare that to the ETF Buzz and its underlying artificial intelligence algorithm, and it's up about 215%. So right there you can see that basing it on social media is going to outperform, at least historically for the last 5 years, the S&P by nearly 100%. So it's pretty crazy that that amount of just AI combing can get you to a performance that is better than the S&P. Here's the problem with the Buzz ETF that Portnoy is involved in now. You know, it is supposed to be, the idea is supposed to be that it is scouring the internet, Facebook, Twitter, StockTwits, Google searches, all of those things for the stocks and the companies that are talked about the most on social media in order to find out the value, with the presumption that just being talked about in a positive way is going to lead to an uptick in the stock price. But the problem is that when the ETF is led by a social media influencer or a social media personality such as Dave Portnoy, because that's really where his celebrity and his investment acumen has been developed, does that present a conflict of interest? I mean, it's sort of a circular type of a thing, right? A circular logic. You're looking for companies that are hyped on social media, and the way to find the companies hyped on social media is by buying into an ETF that scrubs social media for companies that are hyped on social media, and that ETF is owned by a person who hypes things on social media. And so it's sort of a circular pattern of one leading to the other all the way around. So is that something that is illegal? Is it something that's unethical? Or in this realm, this time of social media really dictating the narrative, as we've seen with GameStop and Reddit, is it something that just simply we can't help, so we might as well get on board with? And frankly, we don't know the answers to those questions yet. That's going to be determined by us, whether we pay attention to Dave Portnoy and the Buzz ETF, and whether or not, number two, whether or not the Buzz ETF actually performs and outperforms the S&P 500 and other indexes like it has in the last 5 years. And it's also going to be determined by the legality and the position that the SEC and Congress and other policymakers take with regard to this type of an ETF in this realm of social media and digital influencers. So that's what we have for today. It's really an interesting new concept out there that we're going to be basing our investment decisions purely on the hype and extent of social media mentions and whether or not we can predict the outcome of those with an artificial intelligence algorithm. So it seems like the last 5 years has performed pretty well based on its comparison to the S&P, but we also don't know whether that's going to go forward with the same track record of performance now that there are a lot more people out there trying to influence stock prices on social media. Thank you so much for joining us. Do me a favor, smash the like button, hit the subscribe button, and ring that notification bell if you've got some education or entertainment out of this video. And do me a favor, share it to some of your friends too, who you think might be interested in taking a look at it, and it will really help us to grow the channel. We'll see you in the next video.